Rhynhardt, perhaps kick off with your response on the Greek issue and Europe generally.
Look, David, I think it's very hard to say at this point. I think had you kind of known going into the weekend which way it was going to go, whether Greece will stay in or go out, I think you still won't quite know what to do with regards to how to be positioned in the market. Because I think let's assume Greece does stay in and vote for like austerity. I think initially perhaps the reaction could be quite positive. I think investors have certainly been relatively cautious, certainly the last month or so, and certainly going into the weekend. I don't think anyone has wanted to really take any excessive risk. So markets could maybe rally in the short term. Thereafter, I think the focus will just shift back to the real issues, which is Greater Europe, Spain, Italy, Portugal. So it's kind of really hard to still see how it's going to go. I think longer term there's some major structural issues that we have to deal with, and I think the medium term to long term prognosis, in my opinion, for markets is perhaps not that great.
Well, let's look at the local market, which, as I said earlier, when I looked at 4 o'clock, there were only two shares that were in the green, and half an hour later there were only 2 in the red that weren't in the red. So it seemed to be pessimistic and then optimistic, but none of the share movements very good really, except for Lonmin and a couple of the other shares. Lonmin was moved by 4%, which brings us to platinum, and that's been an interesting sector for you too.
Yeah, certainly. I think that if you had to maybe turn the clock back by 12 to 18 months, I think not many people would have thought that the platinum equities would be trading where they are trading now. I mean, you kind of mentioned Lonmin, and I think Lonmin was down close to 30% last month. So month to date, it is certainly having a bit of a rally, as one would expect, from arguably very oversold levels. But I think the fundamentals in the industry are certainly not what they used to be, especially back in the heydays of 2007 and 2008. The companies are facing a lot of like pressures on their cost lines, and it's kind of just a really tough operating environment.
The commentators were saying yesterday that people were switching from platinum to gold, or gold to platinum, depending. There has been an interesting relationship between the two. The last few days, platinum has been gaining more in the price on gold. Of course, the gold counters have had a special role, and in this rather limited market movement, they've tended to go up or down by more than the rest of the market.
Yeah, look, it's kind of hard to say. The way gold equities behave sometimes baffles everyone. What I would say though is that if you look at the platinum price in the last couple of days, or maybe the last week or so, it managed to put on about $80 to $90, and I would probably say that's really in response to some supply cuts in the industry. We saw Aquarius Platinum closing a mine, saying that they might close another mine. Eastern Platinum is another one of the juniors that are slashing back their like capacity. So I think a lot more of that might actually happen in the platinum industry. I think the industry is just way too fragmented, and probably when the cycle is over, I think a lot of the junior companies that had growth projects would have probably been taken over by some of the major players, or their project funding just would have dried up, which will eventually make, I think, a fairly significant impact on the supply side, and which in turn would result again in higher prices. It's quite hard to kind of see it yet, because you probably need a major producer like an Anglo-American Platinum to really pull back on the supply side, because right now I think that the demand side is still relatively weak. Vehicle sales or vehicle demand is probably still deteriorating. I think jewelry markets are probably also weakening further. So something quite massive has to happen before I think the industry will make fairly good operating margins again.
What about the retailers? Every day there's usually a retail stock which has improved the most on the market. Truworths had a lot of interest today, for example. Shoprite was one of those that did well. And we had the retail numbers out on Monday, which suggests perhaps these good retail performances aren't going to last much longer.
Look, I think so too, but then again, if you asked me a couple of months ago, I probably would have said exactly the same. I think probably most South African investors have been very surprised by how strong retail equities have been. I think the PE multiple re-rating of most of the equities have been fairly staggering. You know, I mean, retail equities used to trade on PE multiples of 10 to 12 times, and now you'll be hard pressed to find one with a multiple, I suppose, less than 16 to 17 times. It does seem to me like the tide is turning a little bit. You know, retail sales have been very robust up until recently, and it's only really in the last couple of months, I suppose, where sales have in fact slightly softened. I'm surprised that it hasn't softened more. So I don't think the retail companies will probably come out with very bad earnings numbers yet, but I think that the earnings growth that they are showing, in my opinion, is certainly in the price. I think that it can't really get a lot better from where they are like currently. They have been outperforming the market for close to 3 years now, and I think that party is maybe over. But then again, as I said, I probably haven't called it too well the last year or so, and they have been certainly a lot stronger than what I would have anticipated.
Well, everyone has been proved wrong with how long and hard the retail stocks can go. That was Rhynhardt Roodt, who is equity analyst at Investec Asset Management.